Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Madison Square Garden Sports, the company behind the New York Knicks and the New York Rangers. It's a bit like your favorite team suddenly announcing they're changing the rules of the game with some financial twists thrown in. Let's break it down. This report, called an 8K, is basically a quick update a company sends to the Securities and Exchange Commission, or SEC, when something important happens. Think of it as a corporate bat signal. The date of this report is April 24, 2025. The big news here is that the New York Knicks and the New York Rangers, which are owned by Madison Square Garden Sports, have made a deal that changes their media rights agreements. These are the contracts that say who gets to broadcast their games and for how much money. This deal is with MSG Networks, which is a separate company, but related to Madison Square Garden Sports. The agreement is called a Transaction Support Agreement, meaning it supports certain transactions or changes. So what's changing? First, the amount of money the Knicks and Rangers get each year for their media rights is going down. For the Knicks, it's a 28% reduction, meaning they will be getting a little more than 80 cents for every dollar they used to get. For the Rangers, it's an 18% reduction, meaning they will be getting a little more than 80 cents for every dollar they used to get. Think of it like taking a pay cut. Also, they're getting rid of something called an annual rights fee escalator. This is like a built-in raise each year. By getting rid of it, the amount they get each year will stay the same. It won't automatically increase. The contracts are also being changed to end at the end of the 2028-29 season. After that, MSG Networks gets the first chance to make a new offer, which is called a right of first refusal. Finally, MSG Networks is giving Madison Square Garden Sports something called penny warrants. These warrants let Madison Square Garden Sports buy almost 20%, 19.9% to be exact, of the ownership in MSG Networks at a very low price, like a penny. All of these changes are expected to be finished by June 27, 2025. Why are they doing this? Well, the report says the Knicks and Rangers agreed to these changes to help MSG Networks deal with its debt. Basically, MSG Networks owes money to lenders, and this deal is part of how they're working things out. The goal is to make sure fans can still watch the games on MSG Networks. Now, there's a section about forward-looking statements. This is basically the company saying, hey, we're making predictions about the future, but things might not go exactly as planned. They talk about the risks involved, like getting the necessary approvals and the possibility of unexpected costs or delays. They also mention potential legal issues and other things that could stop the deal from happening or change the timing. The report also points you to their other filings with the SEC, like their annual report on Form 10K, for more information about the company's risks. You can find these on the SEC's website. So what does all this mean? It looks like Madison Square Garden Sports is making some adjustments to its media rights deals to help out MSG Networks. The Knicks and Rangers will be getting less money each year, but in exchange, Madison Square Garden Sports gets a chance to own a bigger piece of MSG Networks. There are risks involved, but the company seems to think this is the best way to keep the games on TV and keep everyone happy. Now let's step back and look at the big picture. The report emphasizes the importance of continued broadcasting on MSG Networks, highlighting the significance of fan access. This is crucial for maintaining team loyalty and revenue streams. Reducing the annual rights fees and eliminating the escalator might seem like a drawback for the Knicks and Rangers in the short term. However, these changes could stabilize MSG Networks, ensuring long-term broadcasting partnerships and revenue for the teams. The penny warrants for 19.9% equity in MSG Networks are a strategic move. This gives Madison Square Garden Sports a significant stake in MSG Networks, aligning the financial interests of both entities. If MSG Networks performs well, Madison Square Garden Sports stands to benefit substantially. The successful completion of these transactions is contingent on obtaining necessary approvals and avoiding unexpected costs or delays. While the company expresses confidence, the forward-looking statements acknowledge the inherent risks and uncertainties involved. Overall, this report suggests that Madison Square Garden Sports is proactively managing its assets and partnerships. The media rights deal adjustments aim to stabilize MSG Networks and ensure the continued broadcasting of Knicks and Rangers games. The equity stake in MSG Networks presents a valuable opportunity for future growth. However, investors should remain aware of the risks and uncertainties associated with these transactions. Thanks for watching. If you found this breakdown helpful, please like, comment and subscribe for more insights into the world of corporate filings.